everyone. Welcome to the November edition, I suppose, of the Keeling Home series. I'm really excited to be here with all of you today and super excited for our guest today, Patrick Averill with Thompson Kane. So today we're going to talk about all things real estate, all things mortgage, and really excited to give you guys an update on what is going on in the real estate market and what's going on in the mortgage industry and how it affects everyone as a buyer and seller and consumer. So let me know if you can hear me okay, and give us a wave or comment and let us know that you're here. So what we've done in the past is some really cool giveaways. So if you guys are here, you're listening in, you're tuning in, or if you're watching the replay, we have two amazing drawings. One of them, if you're looking to buy within the next year, we have a $500 closing cost credit that we are offering. So you can like, comment, and share this episode, and you'll get entered in to win a $500 closing cost voucher. In addition, we have an awesome $100 voucher to a restaurant of choice in the Madison area or whatever area that you're in. So if you are watching again, like, comment, and share, and we're also going to pick a winner from the video this evening to win that. So the more active you are, every time you put a comment in, we'll put your name in. So thank you again so much for being here. Patrick Averill, thank you for being here so much.
Thank you for having me.
Yeah, so today we're going to talk a bit about what we're seeing in the real estate market and what is changing in the real estate market, because we've seen a lot of changes. And so if you guys have tuned into previous episodes, I talked a little bit last time about what we're seeing in the market and new inventory coming on. It's kind of shifting a little bit and evening back out, which is a great thing for buyers and sellers. So we'll talk more about that. But Patrick, why don't you tell me, before we get started, tell me a little bit about yourself, where you're located. You're with Thompson Kane Mortgage.
Correct.
And Patrick is the VP of Thompson Kane here in Middleton. We worked together for how many years now? Probably five.
5 or 6.
5 or 6, yeah. So tell me a little bit about yourself, your background, you.
Okay. So I've been in the industry about 12 years or so, give or take, and started out at BT Kane Financial, and then from there, about 6 years ago now, we started Thompson Kane. So I'm the VP there, one of the shareholders, also a loan originator, and so being in the industry 12 years, I've seen a lot of changes, a lot of things, the ups, the downs, and refinance market, purchase market. So, we're located on Excelsior Drive, right over here on the west side, not too far from your office.
Mm-hmm. Right down the street.
Yes, absolutely. And we've been there for about 5 years now. And so we are a mortgage bank. And so kind of differentiating a little bit in that we do underwrite our own loans. We do it right here in our Madison office. So, so things have been great.
Yeah, and you guys are expanding too.
We are, yes. So we're currently in about 9 states and continuing to expand.
Yeah. Mm-hmm. And we only work with the best. So the fact that we worked with Patrick for about 6 years, he knows what he's doing. He's an incredible local lender right here on the west side of Madison. We love working with you. So let's dive right in. So you've been in the business for 12 years. I have been in the business now 6 years, I think, this summer. 7 years. Time flies when you're having fun.
It does. It sure
So
does.
I haven't seen, I didn't see the crash nearly as much as you did. So we've seen this up and down. When I came into the market, the interest rates were just starting to drop, and we've seen fairly low interest rates over the last 6 years.
Yes.
Pretty good interest rates. Now we're starting to see this shift in the market, which more inventory coming on the market, interest rates going up. Tell me what you're seeing and forecasting, what's happening right now with interest rates. And then we'll talk about how it kind of affects buyers as well.
Sure. So for the first time in a long time, we're experiencing a market where rates are increasing. And for a long time, we've been used to, probably a good 7, 8, 9-year trend of watching rates decrease. And so in seeing rates increase, it's obviously generated a lot of questions from buyers, real estate agents, what's going on, because it's different for everybody.
Right.
We're seeing home values obviously increase as well. And so, with that comes a lot of questions from buyers as far as affordability.
Mm-hmm.
How much is my payment going to change? What does this mean? Because when you're used to hearing rates of 3.75%, and then you get accustomed to hearing rates of 4 and 4.25 and 4.5, and not too long ago we finally started to hear rates of 5%.
Mm-hmm.
So right now rates have settled in kind of in the high 4s. And so I do spend a fair amount of time talking with buyers about what does that mean for their mortgage payment. How much does their payment change? But also looking at some other factors involved in that. It's not only just about interest rate. You have to compare things like what's going on in the market. Are homes appreciating? What are rents doing in the local market? Because there are a lot of factors that go into determining, I hear a lot like, oh my gosh, the rates are so high now.
Yeah.
But, when I started in the industry in the early 2000s, 7.5%, 8% was a very common rate.
Yeah.
For anybody out there that's listening right now that happened to own a home in the late 80s, rates were 12%, 13%.
Yeah. Which we can't even comprehend.
No.
Oh my gosh.
No, cannot comprehend a rate that high. And so it's just, perception is reality, and that, we're so used to low rates. And those rates were kept low artificially, by the Federal Reserve and the reinvesting in the bond market. So the Federal Reserve did a lot of things to keep rates low for a long time to help jumpstart the economy.
Right.
And we're seeing now what some label is to be a hot economy. Yeah. And with numbers increasing, unemployment decreasing, fears of inflation, those are all drivers for interest rates.
Right.
And so people are seeing interest rates go up, but they're also seeing their 401k and their investments.
Everything.
Everything.
You can't have the best of both worlds.
Yes, and that's what I tell buyers all the time. You
Yeah.
can't have it where your 401k is doing really well and you're happy with that, and you're happy with your investments, but you want that interest rate to go lower.
Right.
So I mean, they are tied together. So really it's just understanding that it's part of the whole puzzle and it's just one piece.
Right.
It's still a great time to buy, and I've had buyers ask, well, should we wait? And now you're talking about forecasting and what people think, what's going to happen in the near future. And I mean, the forecast is for rates to continue to rise, maybe not as quickly as they have this year, but we're going to see rates go higher yet.
Yeah.
So for people that are out there that are looking to buy a house, I mean, now's a great time.
Yeah. Well, and we talked previously, the team has been talking a lot about what are we forecasting in terms of the real estate market, because we get that question a lot too. Like, should I wait? Should I wait until the market drops?
Absolutely.
Like interest rates are going up, but I don't want to buy at the peak of the market. I should wait till something's going to change. And so we've had a lot of people wait around for a long time.
Mm-hmm.
But everything that we're seeing, it's going to remain a strong market for quite some time.
Yes.
And so a lot of the different forecasts that we've looked at and studied and are watching really states like every day you wait as a buyer, you're losing money, because homes are still appreciating. They're just not appreciating at the level that they have been, but they're going to continue to appreciate each year. And you're saying as well, that's what you're seeing in the mortgage and industry, and the rates as well are going to continue to increase. So you have increased home values and increased rates.
Absolutely. And that's what I tell buyers a lot of times is that, in order to capture what is strong appreciation right now in the market, you have to own a home.
Mm-hmm.
You want to get on the front side of that, and we've had great appreciation for the last number of years,
Right.
but that's forecasting to continue to be that way.
Right.
So the sooner you get in, the sooner you're the one owning the home, you're the one gaining that appreciation in the value of your home. You're also during that time paying down your mortgage balance, and you're creating an equity gap.
Yeah.
You're building wealth.
Yeah.
And so it's important to understand how that process all works, especially when I deal with a number of first-time home buyers,
Yeah.
and they'll ask,
Or you're looking to just rent, like
Yes.
rent versus a mortgage,
Yes.
and not really comprehending
Mhm.
what that does for your financial future.
correct, absolutely.
There was a stat that we pulled recently about, do we remember what our stat was on building wealth average price home, I want to say it was almost $80,000. You built almost $80,000. You build in wealth based off of a home value of like $250,000 over a 5-year period.
Yeah.
So real estate is one of the best returns that you can make on an investment currently, and it's anticipated to stay there, regardless of the different shifts that we may see and will likely see within the economy and within the stock market.
Absolutely. Yeah. Yeah, because a lot of times I'll run, to your point, I'll run comparison of rent versus buy.
Yeah.
And even if somebody only owns a home for 5 years, a lot of times their net result will be $25, $30, $32, $35,000 to the positive, even after closing costs and all the things that go into buying and selling a home. The net gain definitely points towards owning a home as compared to renting.
Well, and that allows you to, like, you're building your wealth and your financial future. You guys can put those stats in our comments so everybody can see them. That would be great on net worth that you can build over 5 years. But that's what allows you to continue to move forward too, which is also one of the trends that I've seen, and I don't know if you've heard this too, I'm sure you have, but a lot of people that have been in a home and have gotten those rates that are 3.5%, 4%, they don't want to let that mortgage rate go to move up to a higher price point and a higher interest rate, because they're basically bumping up a point if they purchased 5 years ago.
True, yeah. Point, some people, point and a quarter even, and that's a hard thing for them, and it's one of the big factors in their equation of should we do this or not, is this is what we're giving up, and this is going to be the new reality, and are we okay with that? But then it's taking in all the other factors into consideration, such as, a bigger house, more room, quality of life. How much can we sell our current house for, and what's going to be our net profit on that home? Because obviously, as we've seen, the last couple of years is a great time to sell a house too. So all factors, but yeah, that's definitely a question that comes up a lot.
Okay, so talking about rates, we talked about rates a bit. What would you say is one of the biggest challenges for buyers today and in today's market? What do you talk a lot with buyers? What do you think is their biggest challenge?
I think the biggest challenge for a lot of buyers is understanding the difference in programs and loan programs and what loan program is going to be best for them. So when I have people, sometimes when I have a buyer come to my office, their family member has loan X, and so does their neighbor, so that must be the best loan out there. Not understanding the variety of loan programs, whether you're talking a conventional loan or an FHA loan or VA or USDA or WIDA.
How much should I put down?
Yes, I mean, there's a lot of different factors that go into determining which of those loan programs will be best for that specific buyer situation. You're looking at credit score, you're looking at debt to income ratio, you're looking at down payment, and what funds are available for that. So in comparing all of those, really what it comes down to is getting them to understand which one's best for them, and then going out, and I would say the second part of the challenge in this market is finding a house, which now is a little bit easier than it has been.
We're starting to see a shift, and we'll continue. Like, we're thinking we'll continue to see that shift a bit.
And I think some buyers last year in this spring, if they were buyers of pre-approvals that were maybe FHA, VA, USDA, maybe they had a little bit tougher time. But I think that has passed a little bit.
Because the inventory was so low.
Correct.
And we had so much competition.
Yes. And this spring, I think, was a real challenge for a lot of buyers to find a home.
Yeah, absolutely.
But knowing their numbers, knowing the loan program, and having confidence in this is what's best for us, and moving forward, this is what we need to do to execute to get into a house. That's that's key. It's key for buyers, because you have to know your numbers. Absolutely. Absolutely. Yes.
So speaking on what we're seeing in the shift in the market and why it was so tough for buyers right now, we talk with a lot of people that say right now, I want to wait. So even though we have more inventory on the market than we've had in years. Like statistically, we're starting to see more inventory come on the market. So there's more options for buyers. It's not as tough in terms of like that seller's market and low
Yes.
inventory.
Yes.
However, right now when we go into this season, people are always saying, I'm going to wait until the spring market. Because although they still have a lot of options, it's like this notion of, I might miss something, or I need to wait until the spring market.
Mhm.
What do you have to say on that note?
I say don't wait. I say don't wait. And there's a couple reasons for that. One being, this is a great time of the year to buy a house.
Yeah.
Oftentimes there's less competition. One of the reasons, and I explain to buyers, one of the reasons I feel the spring market becomes so hectic a lot of times is the number of buyers that are currently, like right now, they're in a rental contract.
Sure.
Some of them can't break that rental contract. So they're waiting till spring to get closer to when their rental agreement ends, and then they spend 2 or 3 months feverishly looking to get into a home.
Yeah.
And so there's a segment of that buyer population that goes away.
Right.
And so what happens is you do find that there are fewer buyers in the fall. They're still out there, but there's maybe not as many that are urgently looking to write an offer. So you find less competition oftentimes.
Which is great as a buyer. It's not a negative.
No.
It's not a, oh, what's wrong. It's really an advantage
It
for
is.
buyers to look this time of year.
It is. It's a huge advantage.
And so there's that advantage. Also, the fact that rates are going up, like
Correct.
they are going up, they will
Yes.
continue to go up.
Mhm.
And from a real estate perspective on things, on like my end, sellers don't just list their home to test the waters in the fall market, in the winter and the holidays. So usually they're very serious sellers that need to sell or want to sell.
Sure.
So I think that there's a lot of advantages there.
Well, and to tie back into what we just talked about before, or a little earlier, was the appreciation thing.
Yeah.
You know, the sooner you're getting in, the sooner that appreciation is working for you as the homeowner, rather than waiting till spring, where oftentimes we see buyers might have to offer a little bit more or pay a little bit more to get a house
Right.
than they necessarily would in the fall.
Right.
And with rates rising, rates, if you're talking $225,000, $250,000, $275,000 price point, you could be looking at a difference of, if rates go up 1%, you're talking a difference of $200 a month,
Which is a lot.
which is a lot for your mortgage payment.
Yeah.
Yeah. So getting those numbers, and I do what's called why wait, and I will get those numbers to a lot of my prospective buyers so that they understand if rates are forecasted to increase like they are, what happens if they go up 0.25%?
Right.
How does it affect the mortgage payment?
Right.
And because I'll get a lot of buyers that'll be like, oh my gosh, rates are going up 0.25%. But what does that mean as far as, because at the end of the
Doesn't
day,
seem like that much.
no, at the end of the day, the numbers have to relate to their budget, their pocketbook, so that they can put a real life feel to what I'm talking about when I say rates are going to rise. And if they rise by 0.25%, that means X. And also with that's the pre-approval. If you're pre-approved for $350,000, but that pre-approval was ran at a rate of 4.5%, rates move up to 5% or 5.25%, it's good to check to see, well, what does that mean for me as far as my buying power?
Do you have any do you have a general example of what that could look like for someone?
Sure. So
Like say their max budget is this and they're pre-approved for that and then the rates go up.
yeah. So if someone was pre-approved for $300,000, let's say, and depending on the loan program, that's gonna change a little bit too. But rule of thumb, if let's say rates go up 0.5% and someone's pre-approved for $300,000 and they're okay with that $300,000 price point and that payment, they're probably going to want to look more in the $250,000 range to get an equivalent
That's
monthly
a
mortgage
big
payment.
jump.
It is.
$250,000 to $300,000. That's a big jump.
It is. It is. So, and knowing that's important because you don't want the shock of getting an accepted offer, you're a buyer, you think things are wonderful,
Right.
and then all of a sudden you see the interest rate and the mortgage payment, and you can't believe it.
Yeah.
So it's a huge shock, and you don't ever
a
want
bit of
that.
stress.
And it becomes very stressful.
Yeah.
Yeah, very stressful. Potential buyer's remorse.
Yeah.
what do we do now? We weren't aware of this. We didn't know. So it is important for buyers who have been pre-approved. And in this market, some have been out there for a number of months or a year.
Yeah. Waiting.
Mhm.
And then you're pre-approved for this and you think, okay, let's just wait. Or like the market's going to shift, let's wait. But that pre-approval significantly have changed depending on where you're at with budget
Yeah.
flexibility.
Yeah, so if it's a buyer that's been out there for a while, it's good to check again.
Yeah. One of the reports that I had just read basically said that the rates that we see now are likely going to be the best rates that we see in a lifetime, which this gentleman that was running this is probably in his 50s, so probably maybe
Yeah.
the best rates that he'll see in his lifetime. But and basically just stating that every day you wait as a buyer, you're losing money right now in today's market.
Yeah, and I would 100% agree with that. I look at 2000 and basically 3 through 2014, or so, 15 even. We saw a downtrend in rates, and then everything kind of just stayed status quo, bottomed out, stayed level for a while. A little bit of fluctuation, nothing major, but there was a lot of influence by the Federal Reserve to keep those rates that low. I mean, those were beyond historic lows, and they're not reality.
Well, and even then we were hearing like the rates are going to go up, the rates are going to go up, and it was like the rates are going to go up to 4.25 or 4.5, and they stayed steady for quite some time. But
It did.
For what the reasons that you're talking about.
Yeah, and so now the Federal Reserve, they're no longer reinvesting money into the bond market. So because of that, bonds, there's just not as much appetite for them, and because of that, 10-year Treasury is doing well, mortgage rates are rising.
So economy's doing good.
Yes.
Everything's doing good. So we're going to see the increase.
Yeah, we are, and but still, 5%. It's a great market, and whether you're talking 4.75, 5%, 5.25, that's still an amazing interest rate for a lender to borrow to someone to purchase a home, significant amount of money, and it's still a low interest rate. Especially historically.
And good investment in your financial future.
Yeah.
For sure.
Yeah.
Okay, so we talked, going back to what we were talking about before, and biggest question for buyers, you said, is really understanding the loan programs, which I can tell you guys that you are probably one of the best at sitting down and going through like where someone's at financially and what is going to make the best decisions, how to educate them on what the best decisions are for them. Because we see this all of the time, and so this will lead me into the next question for you. But when you're sitting down and you're talking with someone, which I think is so important because there's a lot of different loan programs out there, and what we see oftentimes is if people have done some of their homework or they have decided that they're going to go and at least get like some of the financing done or meet with their bank, is they come into the pre-approval and it's just a pre-approval. They apply online and it kicks out, generates this pre-approval for whatever type of loan, whatever, but they don't understand like what their options are as a buyer, and they're not educated on the loan programs. And so when we work with our consumers and our buyers specifically, it very much is trying to educate them on trying to work with a local lender that's going to be working in their best interest, which is more like a financial advisor than it is a bank that you're lending money from. So tell me a little bit of the difference and why you feel it's so important. On our end, we understand that, but what makes Thompson Kane you different than Quicken Loans, the other program that we just had, Rocket Mortgage, where we get people come back and say like, I have a better rate at Rocket Mortgage, or why can't I just go to Quicken Loans or whatever? When we see that on our end, it's a huge red flag. But tell me why it's important on your end and why you're different from some of those options.
Yeah, and it's a great point. I would say probably the biggest difference is the willingness to sit down at a time that's convenient for my buyers, whether it's at night after work or on the weekend, in meeting with them to talk about their situation specifically, not generally, not as, you should be fine, pre-approved for this, to really get into more of the details about budget, down payment, how do things change if I put a little bit less money down? What happens if I put more down? What is PMI? What are closing costs? What are prepaid items? When do I have to pay for certain things along the way.
Right.
So a pre-approval letter is great, but if you don't understand all the details and specifics behind that pre-approval, and if someone's not willing to explain it to you, sometimes in layman terms, so you can understand what's being discussed or what's being paid for, it can be confusing and also very surprising, upsetting, stressful.
Yeah.
So getting an idea from the standpoint of loan program, pros and cons. I mean, because there are a lot of people that probably qualify for more than one loan program.
Right.
So then how do I know which one's better?
Yeah.
What are the pros and
How do
cons?
you position yourself the best? What are your financial goals?
Yes.
Where do you want to go? Yeah.
Yeah, do I want to put 20% down on this house, or do I only want to put 10% down because I don't want to use all of my assets, and now I don't have a rainy day fund, or I don't want to pull that much out of my 401k?
Yeah.
What makes sense and why? Okay, if I don't do this, then can I go to a loan program X, and what does that mean for me? So when you really dig into it, there's a lot more than just saying, yep, you're good at 300,000, good luck. And so I think sometimes, more general online pre-approvals spit out a number, people are excited and happy, but they don't know the details behind it. Are you paying points? What are your closing costs? What do prepaid items mean? Homeowners insurance, I have to pay for that first year premium. When do I pay for it?
Right.
Before closing, day of closing. So there's a lot of moving parts to the process. If someone's going to have a home inspection, when do I pay for it? Okay, well, then when do I pay for the appraisal?
Right.
Why are they different? And so the details that can be discussed in those meetings, and the feedback that I receive from my buyers is that they can't tell me how much they appreciate the fact that me explaining everything to them allows them to feel that the process makes sense.
Yeah.
That they know what they're up against, and so as the process moves forward and they start to see loan estimates and closing disclosures and these different numbers, they can make sense of them because they know what they mean, rather than, oh my gosh, what is this?
Not surprised by it. I mean, we just had someone that we're mutually working with too that wanted to start doing investment properties. And the loan program that he had mentioned on it, I'm like, for me, I'm not even a lender, that's not my area of expertise, but I'm like, that doesn't make sense for me because you're going to have X amount of PMI and you're going to have this and that. And I mean, even that basic knowledge, he's never had anyone go through that with him before. And so it's like, you should meet with someone and be able to really understand, like, what does this look like? Where are you putting your money? Especially as any investment in real estate is an investment. It's an investment, whether it's a home that you're living in or an investment property. But still really understanding what those loan programs look like, what your monthly payments are going to look like, what makes the most sense, because you can literally be leaving like hundreds of dollars on the table.
Absolutely. Or going into it thinking I'm okay with this loan program, and I only have to put down X number of dollars, and I'm comfortable buying up to this, but not realizing that for an investment property, guidelines change.
Right.
And so there's different factors involved on what's the use of the property going to be. Is it going to be a primary residence? Is it going to be secondary? Is it going to be investment, like you were just talking about? So I guess things change.
Yeah.
Interest rates change. Down payment requirements change. Loan programs.
Yeah.
And then is it going to be an investment property that's 1 unit, or is it going to be a 2 to 4 unit investment property?
This is a whole other Facebook Live.
It is. Yeah.
That we'll have to do soon, investment
Yes.
properties, because I think a lot of people right now, especially when you talk about the amount of investments amount that you can make on investments, a lot of people are really interested in investments right now, investment properties.
Sure.
Yeah.
Yeah, they are.
Yeah.
So it's becoming more popular, especially right now. And I think part of it with rents, we're seeing it. Rents are going up.
And rents are going to continue to go up.
They're going to continue to go up.
They're outrageous.
They are.
Yeah.
And so I think it's piqued a lot of interest from people to explore getting into the investment world and purchasing properties used solely for, income generating, so uses, and, so we're starting to see more and more of it.
Yeah, we will continue to see more and more of it too. Okay, so local lenders, I can't stress it enough. Like, I'm a huge advocate of yours, so understanding that of it is massive on our end, but also everything that you do is local. Like, it's right in your office for the most part, correct?
Yes.
So
Yes,
we need
that-
answers when we go through the process. A lot of people don't know the back end of the process of lending. Like once you get an accepted offer, it's not just I bought a house today. You actually have to go through, if you have financing, you have to go through the underwriting process. It's like a full 30-day process usually that we go through once we get an accepted offer and you guys take it over. The nice thing that I absolutely love about your office and your team is that you guys do everything locally. And so we know that the appraisers know the market and your underwriters know the market. Like we can get answers right away, or we can call you. We have that contact versus when we have worked with some of the quick-in loans, or I think sometimes people think when they do a VA loan, they have to go through this national VA thing. They don't have to.
No,
And they're
they
gonna get much
absolutely
better
not.
service if they have a local lender as well. But, not waiting 2 weeks to get an answer back, or you get to the day of closing and then something happens. There's so much ease of the transaction on my end, on the consumer's end, and on your end, I think.
Yeah, I think so too. To your point, we do everything right in our office. So from the first step, opening the loan and starting the process and ordering the appraisal and finding out who we're going to use for title and getting into the processing piece of it and underwriting and closing funding, that's all done in our office. So my entire team that works with me on all of my loans, they know what's going on. They have a good grasp. Everyone knows the market. Our appraisers know the market. And communication is key. And I think it allows for efficiency. And on top of that, it allows for buyers and realtors that are involved in the transaction to feel confident that they know where things are at and that things are progressing as they should. And we're not going to have that last minute 1 or 2 days before closing, surprise. And if something does come up and it's important to get it resolved or get an answer, to do that quickly is very important.
Right.
Because let's face it, no matter how smooth a transaction appears to be from the start, sometimes there's something that comes up along the way, a hiccup, a hurdle, whatever you want to call it.
I think there always is.
Yeah, well, when you do enough transactions, it's going to happen.
Yeah.
But
You have to work through it.
Yes,
and having the knowledge and the expertise to work through it.
How do you fix it? How do you resolve it?
Right.
And can you do it in a quick, efficient manner?
Right.
And, whether it's calling me or someone on my team, talking to my processors, available nights, weekends, we can get answers in 2 minutes from our underwriter. It makes a difference.
It makes a huge difference. I agree.
Yeah.
I agree. Okay, what are some of the, so we talked a bit about, this might be just going back to what we already talked about, but do you think that are there any common questions that you get that we haven't discussed today from consumers and buyers when you meet with them?
Right now, the big questions surround interest rates. Where are they going to go? Loan programs, and then understanding the difference between the loan programs. Oftentimes, buyers also ask, how long is my pre-approval good for?
Yeah.
3-4 years ago, buyers would get pre-approved, and oftentimes they would write the next weekend, have an accepted offer, and close in 30 days, and I would barely spend 45 days with them from start to finish of the entire process. And same for you guys.
Yeah.
But now we're spending a lot more time with them. And so I'll get the question of how long is a pre-approval good for? Most of the time you're going to hear pre-approvals are good for 90 days. And the reason why is because credit reports are good for 120.
Okay.
So once buyers hit the 90-day mark of when their pre-approval was issued, it's always a good idea to check back with the lender and let them know, has anything changed? Did you go buy a car? Did you change jobs?
Yeah.
Did you miss a payment on something? Because that credit report's going to expire.
Yeah.
And if you write an offer on day 100 or 110 and you're not closing until after that 120-day mark, you're going to have to generate a new credit report.
Yeah.
And if something pops up on there that was not on there before, that could change the situation. Absolutely.
Yeah.
Somebody could go from being pre-approved and qualified to all of a sudden not, and having to scramble to try to make it work. Whether it's debt to income ratio related or credit score related. So that's a big one. How long is my pre-approval good for? Because most people, they're just not getting accepted offers or houses as quickly. And it's changed a little bit now, but for a good part of last year and this year, that was a pretty popular question.
Yeah.
Well,
and we really try to educate people on go and get a pre-approval, but then you're right, if you don't find something for 6 months, 3 months, 6 months, 8 months, that's when you kind of need to check back. Because sometimes life changes, or it's like, oh, I'm gonna I'm gonna buy a boat. It's the summertime. I'm gonna
Yeah.
buy a boat, or I'm gonna do this, or I'm gonna do that.
Yeah. And then I would say another common question is, if I tell a buyer you're pre-approved for 350,000, they want to know what that means. So what is my payment? So
That's the important part.
it is. That's the important part. And so what I tell them is, because I'm pre-approving them just based off the numbers they've given to me.
Right.
So we're talking income or assets available for down payment, identifying the loan program. That's what their pre-approval is being generated from. And that's why I like to take my conversations a step farther. And if I'm meeting in person or talking on the phone and asking them, do you have a target number for your mortgage payment? Because a buyer might be pre-approved up to 400,000, but they don't want to spend or buy a house for $400,000 because they want their payment to be $1,600 a month.
Right.
And so asking the questions of, what is my monthly payment? Because, we have 2 children in daycare.
Right.
Daycare is something that does not show up on a credit report. So if I don't ask the question, if someone has children, are your children in daycare, and is that an additional cost? Because even though I don't know, and I've heard a lot though, daycare is expensive.
It's expensive.
It's expensive, yeah.
It
Yes.
really is.
So those types of things are good to talk about because that impacts a family's budget.
For sure it does, yeah.
So when I'm pre-approving
Well,
them,
and that's your quality of life. That's
It
your
is,
lifestyle
sure,
too. Or like
yeah.
maybe you are a heavy investor, or whatever. You like to travel, whatever it is. It's being able to really. We say the same thing. You might be pre-approved for X amount, but you may not want to spend that amount. And knowing what your monthly payments are, because otherwise that's a big surprise.
can be, absolutely.
Yeah, it comes back and it's like, oh my gosh, my monthly payments what?
Yeah, I can't afford this.
Right.
We're gonna have a second or third child in daycare, and this isn't gonna work for us.
Yeah.
So yeah, having that talk is important, and that's where I feel like one of the advantages too. For example, like myself, being a local lender, okay, I live in the area, I know people in the area, have friends in the area, I go out in the community. So knowing that I'm doing the right thing for people is very, very important.
Yeah.
If you're talking to a national lender that might be in another state, Ohio, New Jersey, Arizona, wherever,
You're just another person.
you're another person. You're a loan number to them.
Yeah.
And I truly believe that, because at the end of the day, yeah, they want your loan to close because they want to, make money.
Right.
But if it doesn't, they're not going to lose sleep. It's not going to impact their life, and they're not going to be very concerned about it at all. Where for me, closing not only on time, but having the process go smoothly for every single buyer that I work with is of the utmost importance.
Yeah.
Because like
You're
yourself, you're a
Yeah.
realtor, you're entrusting me with your buyer,
Yeah.
and that's important. So I have a vested interest to make sure that this thing goes smoothly all the way to the finish line and beyond, and that everybody's happy, because that's my role.
Yeah.
And
Well, and to do the best for them too.
Mhm.
Say the same thing. It's not like you're hiring me to be a friend.
Yeah.
At the end of the day, I want you to like us, and I want you to be able to come back and have questions and come to our appreciation parties, all of that, see
Sure.
around town.
Yeah.
However, you're also there to do a job, and a really good job, which is something that they're trusting you with.
Yeah, and it's important because when families are moving, there's a lot that's going on in their life.
There's a
It's-
lot. Yeah.
It's hectic, and there's a lot of things they're trying to organize and make sense of. And I look at my role as a lender. I'm sure you do the same as the real estate agent. That I'm trying to make this process as absolutely smooth and easy as possible for them. I don't want a bunch of headaches for them. I don't want a bunch of inefficiency. I don't want a bunch of frustration, because just closing on time, that's not enough.
Right.
So that extra vested interest, especially when you're dealing with a local lender, I feel like that's more genuine and real, because, well, it is. It's not, I don't have to make it up. I don't have to fake it. If I'm talking to a buyer in Florida, I'm going to care about that buyer too, but it's still different.
Yeah.
It's still different than when you're doing, working with people that are right in your area.
Well, it's so interesting too in our industries, in the insurance industries, and in many industries that I'm sure people are in, and just the way our world is turning right now, and the fact that robots are going to be taking over, and how long, like all of these things that you hear. I feel like even now more than ever, of course, everyone is so busy. We live these busy lives, and everyone is so busy with everything. And it may be easy to just go online and apply for something or do it online and take that step out. It's the same thing as, Nathan, my husband, is in the financial industry. It's the same, like you could go online and you could manage your own financials, or you could, buy your own stock, all of that. But at the end of the day, how much are you actually gaining out of that?
Yeah,
For
exactly.
me, I have a very busy life.
Mm-hmm.
I have a lot of things going on. I appreciate the relationship. I appreciate being able to go to an expert and having not a robot, not an operator that says press 2, enter this, and then spits out something. I want someone to advise me on like what's going to be the best for my family. What's possible for this? What do I need to do in order to maneuver or plan? And it goes with houses, finances, all of those things. I don't see that going away anytime soon. I think that relationship is huge. It's even bigger for people that don't have that time to do the research on their own, finding someone that they can trust.
Yeah, I agree.
Can put that time and effort into making sure that you're making good decisions.
Yeah, and as things become more automated and we use technology more, I think that connection, that personal connection, having that person that's there, and that's easily accessible, I think is a rarity. Because
Starting to become a rarity.
it feels like it.
Yeah.
I mean, yeah, we have, like I have my mortgage app, online application, but at the end of the day, when someone fills that out, I'm still reaching out to them. I'm not just emailing them a pre-approval and saying, good luck, let me know if you need anything. They're going to be getting a phone call, and I'm going to find out what's important to them, what do they need, what do they have questions about, and, do you want to meet in person, do you want to sit down face-to-face? I'll make time, it doesn't matter
So
when.
important.
Yeah, I mean, because I think it happens less and less, and when you're talking about somebody that's getting ready to start the journey of purchasing what's probably going to be their largest asset, probably largest purchase they ever make in their life until maybe their next house.
Yeah.
I mean, I would want somebody that's knowledgeable and experienced and willing to take the time that's going to look out for my best interest to make sure that I'm avoiding any pitfalls or problems, or am I getting into a bad loan, or am I paying closing costs that are absolutely outrageous and I shouldn't be? That's taking money out of my family's, checkbook. That's, to me, that's important.
I think that's very important. Yeah. So, okay. So is there anything else that you want to share with people today that we didn't cover? We covered a lot.
We did.
Yeah.
We covered a lot.
Yeah.
A lot more than I thought we were going to cover, actually. So,
Yeah.
But all good stuff.
Yeah.
I mean, all good stuff, all very relevant stuff. Because I think when people think about buying a house, it's like, okay, I need to get pre-approved, I need to write an offer, we need to get it accepted, and then I've just got to dish out a bunch of money, and then we get to move into a house. And there's so much more than that. And I think it's a really refreshing process, and I think it's something that when people are involved in it, they really appreciate what all comes with it, and it's exciting. But with that excitement, for some people comes some stress and some anxiety. So there's a lot going on, and for buyers and sellers to be able to work with professionals that know what they're doing and they're experienced and they're looking out for their best interests. I mean, I think that's probably the most critical and key point. That
we've had a few of our own agents buying houses this year, and you understand, like, it's even the industry that and even then it's stressful. And so
it's like, oh my gosh.
Having that, it's like, wow, there's a lot that goes on here.
Sure, it's like, wow, this is what my buyers are going through.
Right.
And even when when my wife and I bought our house 5 years ago, going through the financing process, it was getting those things together and understanding.
It's really fun.
It is. Understanding that it's a great time.
It's a really great time.
Yeah.
All of that information and your financials and your taxes.
Yeah, and digging into all that stuff. And the best part is doing it at a time when you realize it's a super busy day, but you need to get this, and then the stress kicks in.
Yeah.
And that's where being thorough up front and setting the expectation of, you're going to need this, you're going to need this, and be prepared for this, and you're getting gift funds for your down payment. Okay, well, this is the best way to do that, rather than finding out later on someone's getting a gift and then it kind of turns into a mess. I mean, it's a a lot. People have a lot going on. They're busy. So you want to make the process as smooth and easy as possible.
We do that.
I try.
Yeah. So Patrick Averill with Thompson Kane, thank you again for being here. We'll put all your information in the notes too. Do we have any questions that we need to answer tonight? All right. So if you guys are watching the replay, you can feel free to post your questions in. We'll come back. You can still enter your name into a drawing. We'll draw tomorrow night at 5 p.m. We'll draw the winner. So get your questions in before then. And I hope you guys all enjoyed today's episode. And if you have any mortgage questions, we'll have Patrick's information below. Otherwise, you can reach out to us as well. We're happy to answer any of the questions that you have and help in any way that you can. So thank you again for being here.
Absolutely. Thanks for having me.
All right. Bye, guys. I'm going to turn you all off. Thanks so much for joining us.